Seeing is some profit taking. It's been a very good September so far, especially for those mining stocks. We've seen the material sector up by almost 10% for the month. So profit taking has seen gold, silver prices down in Asia trade. We saw a loss of 0.7% for gold and a loss of 1.3% for silver. But if we have a look at for the month so far, we have seen gold in both US dollar terms as well as in Australian dollar terms up by about 5.5%. So we did see the materials space taking a bit of a step back today. The discretionary space also sold off, as was energy. On the flip side, those defensives in favour. And I think what we are seeing is a little bit more concern on the growth story, the global growth story, and we're watching China as well as Europe in particular. In Europe, we're watching Spain. The Spanish 2013 budget goes to Parliament in 3 days' time, and the market is thinking that this could perhaps be the catalyst for Spain to formally request a bailout. That would be seen as a positive by the markets. But on the flip side, China very much in the spotlight, and of course we did see the Shanghai Composite down for most of the session, but at the moment reversing course, so up by 0.1%, so reversing from those 3.5-year lows that we saw this morning for the Shanghai Composite, and a number of stocks trading X on the Australian market as well. But altogether, the market down by 0.5%, and some of those global growth worries back in focus.
Very much the weight on us at the moment, and I suppose undermining any confidence that might have been generated from some of the central bank movements.
We have seen some extraordinary action, and I think it's a bit of a tug-of-war at the moment between the action that we've seen, or the action that is to be had from the European Central Bank, the US Federal Reserve, the Bank of Japan, as well as the stimulus coming through from China. On the other hand, I think what we are seeing are signs that the global growth story, or the global trade story, is really slowing down. Numbers out of China, Japan, as well as Europe suggest that both on the export and the import side, we are seeing growth really weakening off there. And we are also seeing some signs from the transport sector. Now, the transport sector does tend to be a bellwether of the global economy, and last week we heard two profit warnings coming through from two different transport companies. One of those was FedEx, which slashed full-year guidance by about 10%, and the other was Norfolk Southern, which is a railway company, which slashed third-quarter outlook. Now, if we have a look at this transportation companies, it was quite interesting listening to some of the rhetoric coming out. If we have a look at FedEx, its CEO came out to say that we really have seen the China numbers reflecting the big swings that we've seen in both the US and the European economy. So the fact that we are seeing Europe still quite weak is having an impact in terms of China, in terms of Japan, which are of course big exporters, and Australia of course with the link with China. So altogether, I think the trade signs aren't looking too healthy there, and the market's a little bit nervous about that, even though we've had those extraordinary moves by the central banks, and one eye is just really being kept on the manufacturing space, the export and the imports.
Today, in terms of the market, not great news in regards to BHP Billiton.
Given that we've seen this stock falling 23% in the last month already, it was quite disappointing to see it falling almost another 9% today. So the nerves around that mining services area really does continue. Earlier on in the month, we heard from NRW Holdings and the impact out of Fortescue's announcement that it'd be cutting back on capital expenditure, and we saw about a $100 million impact there to FY13 revenue forecasts. But of course, if we have a look at this BHP contract, they're estimating a $75 to $80 million hit there. So the shares are reacting, and I guess the nervousness is around that perhaps we might see more of this coming through for the mining services company. So unfortunately, not a good day for NRW Holdings. I mean, on a valuation basis, looking very attractive, but of course all of that is really dependent on a recovery in commodity prices, and that we don't see a capital expenditure cliff coming through after FY14, and that we do see more projects coming online here in Australia.
And Julie, also Nufarm coming out with their results. What did you make of them?
Well, Nufarm, the results very much in line with expectations, and I guess if we have a look at the last 5 years, it's been quite a transformational time for Nufarm, and that's really because of the fall-off that we've seen in glyphosate prices, where we have seen prices falling off a cliff, and of course some of the business divisions have been sold off. The industrial chemicals division has been sold off, and if we have a look at Nufarm now, it's primarily a crop protection company. 95% of its earnings comes from that area. We have a look at Australasia, though, was looking quite flat, and really the standout here has been Brazil, which has been firing on all guns. But the real disappointment here came through from the dividend. We were expecting to see a 33% payout ratio here, but of course the dividend much lower than what the market expected, an expectation around 11 cents, and it's coming at 3 cents. So we have seen the shares down by almost 4% today.